Well, I think for one, what is different is that the speed at which the decline occurred has been unprecedented. This is the fastest 30% decline ever. Investors overlook the fact that the system, the financial system, has become increasingly fragile, unstable, because the Feds and other agencies wanted to make the economy more stable. In other words, they intervened continuously into the market to make it stable, and by that they added a long-term instability into the system. When actually they introduced QE1 in December 2008, I publicly stated that this was QE infinity, because I'm familiar with government programs. Once they're introduced, they're usually permanent. And I'm also familiar with money printing, which is essentially the administration of drugs into a patient or painkillers. It doesn't lead to a healing process, but it removes the pain, at least temporary. The issue here is, we have a problem, a systemic problem. And the problem is not addressed, but it's kind of fixed short term. It's not repaired, it's fixed. And they think maybe, well, we'll fix it first, and then we'll find another long-term solution thereafter when things have stabilized. But the problem is, when things stabilize, they find it wonderful that everything works again, and they'll continue to print. Well, I wouldn't rule out that this is the catalyst to a reset in the world, politically, socially, and in asset markets. Now we have to see this since 1981 in the case of bonds, and 1982, August 82 in terms of stocks, bottoming out. And since then, we've had this colossal asset inflation. We didn't have a very high consumer price inflation. Consumer price inflation was higher than what the government is publishing, but it hasn't been hyperinflation. And asset prices were really globally, all assets, real estate, stocks, bonds, art, everything has gone up. I think we've embarked on essentially free money, or the idea of a basic income. In other words, MMT, modern monetary theory, which is not modern and is not a monetary theory, but it's a fiscal measure, will have been introduced by essentially the Republicans. You have to see that. But I think it's a step, and it's a small step, but nevertheless an inevitable step towards anarchy, or towards a totalitarian government, and towards socialism. The government will decide, how much money you will get. And by giving you money, the government will have a lot of power about what you say and write and do. They say you can get the money, but you cannot leave your house, or you can get the money, but you have to work in that area or in that sector from then to then, and so forth. So they can attach conditions to the money they pay out. Commercial property is really toast. I tell you, this trend to work at home has begun, and is irreversible. Young people say, okay, I live in the countryside, and once a month I come to the office, and I can live in the countryside at a rent, or that is a quarter of what I would pay in Manhattan. The problem is this. You know, you have an economy. The economy is manufacturing, agriculture, service sector, and so forth. And then you have also the financial market. And when the financial market is in harmony with the real economy, it is a relatively small part. But what happened under the Keynesian is that they let this financial market become larger and larger, because obviously asset inflation benefits people with assets the most. So they love it. Goldman Sachs loves interventions, loves money printing, and so forth. And they're not the only one. The other banks and BlackRock and Blackstone and so forth, they all love it, as well as rich people like Warren Buffett and so forth. Anyway, the financial market, especially in the US, but also in other countries of the world, has become disproportionately large to the real economy. The Fed basically created, unintentionally, initially, I guess, they didn't think about it, they created a monster. And this monster became bigger and bigger and is now no longer controllable. And so the monster demands more and more from its master, the money printers. And it will end in disaster